Okay, let me share my screen. All right, looks like we're live. What's going on, everybody? Um, my name is Amal. I got Faisal on the call with me today. We are going to do a weekly wrap up of what's happened in the market. And technically, the month of July is ending today as well. So we can kind of go over a little bit of the month and let y'all know our thoughts on how the market has been for July and this past week, and then how we're looking at the market going into the week ahead. So I got Faisal here with me. So welcome, Faisal.
What up, man? How you doing?
Pretty good, man. It's been a heck of a week. Tech up again, small caps down a little bit. What are your thoughts?
Yeah, dude, this was honestly one of in my opinion, this was one of the toughest weeks for me of the entire year. I didn't even do that good. I was really into biotech to come into the week, and that ended up closing as probably the worst industry out of everything that I viewed. So it was really not the best week for me. But you know, today was also it's just been a really big chop session from Monday to Friday. And I think this morning, after we got the great earnings yesterday, everyone came into today expecting tech to be up heavily and for there to be continuous buying in the entire market because right after those earnings came out, it wasn't only the Nasdaq that was up, but it was the S&P, the Dow, all the futures were up, and that could be because the S&P and Dow do have some tech exposure. But if you looked at the individual ETFs, whether it was XLF, XLV, XLE, all of these secular ETFs were also up 1% or close to 1%. So the sentiment that came in after those earnings was very positive. But one of the key things was the small caps were actually down when I checked later on that night, even as the S&P and everything else was still up. And then coming into today, the small caps ended up being by far the worst performing index. And I think that's largely because biotech and a lot of the small cap healthcare stocks they were just getting clobbered this week, and they closed out the week uh, very weak to say the
So,
least.
so what do you make of small caps being down and then tech taking off some more? Like, how do you sort of reframe your view of the market by the end of this week and then going into next week when you sort of see this kind of closing?
Well, it kind of plays into what we've been seeing for the past couple weeks, which is when you see high growth and tech perform really well, you're going to see these value sectors and small caps. They usually underperform and not do so well. So going into next week, it's really weird because how the IWM or small caps is diversified. It has a lot of different stocks in many different sectors. But the main driver that's been in this ETF has been the small cap healthcare stocks. It has a lot of small cap financial and retail, and a lot of these stocks have not been doing good the entire year. But when the small caps have moved, it's predominantly been because small cap healthcare stocks have been pushing this ETF upward. So I'm really going into next week. If tech continues to go up, I, these other sectors like financials, industrials, energy, I don't think they're going to do that good. But tech once again looks extended. But it's looked extended for the past, I don't even know how long. So I'm not betting against it. Well, I am actually. I'm in an XLK short, but I'm not betting that it's gonna crash anytime soon. I'm after this close, I'm probably looking to get out of it. But next week, I just really feel like if you start to see tech perform well at the beginning of the week, then it's probably a sign that software, cybersecurity, all these other industries, semiconductors are probably going to have another great week. And I think that semis still look very attractive, like stocks like TXN and MRVL from a technical basis. They still look really good, and I
Yeah, I
would
think
be yeah.
I was gonna say you've been talking about semis and especially Marvell, SMH, some of these companies or TSM for a while. And for those of viewers who are watching right now, you could check out Fassel's equities trading channels right here. And he puts out these alerts pretty much every single day, updates on all his positions that he's taking in the market, getting out of, shorting, longing, all the cover parameters, all the different trading parameters, etc. So I think you provide a really great detail. And I was looking through some of your list this morning. I think you were shorting Goldman Sachs, or I guess you were in a long position in Goldman, and then you closed that out. Workday was another one. I saw all these positions. Now, in your portfolio right now, are you in any semi stocks at present moment?
No, I mean, going into the week, like I said, it's been a very flip-floppy week. I was in Marvell to come into the week. I had to get out of that when I saw, um, semi showing me some weakness, and I just didn't trust tech in general. It was breaking through some key technical levels of mine. The Nasdaq in general was not showing me the strength that I wanted to see. High growth was not showing me the strength I wanted to see. So I got out of Marvell. Then yesterday or 2 days ago, I got into Micron. And then I got out of that today, just before the close, because I felt like when you have these weeks when you don't do that good and you come in expecting something, and usually I'm pretty on point throughout the year, and so when I have a week like this, I like to take a step back and just maybe have a breather week and see, um, you know, just where exactly the market wants to go, and not try and force anything or feel like I need to play catch up. So, I wish I was still in those semis after the way things closed, but if you would have asked me this morning, I would have been like, I want to get out of them. So it's really just a testament to how choppy the market can get. But like I said, Texan, TXN, and Marvell both look really good from a technical perspective.
Okay, good to know. Um, let's talk about some other sectors like XRT, right? I mean, this sort of gives us the underbelly of what's happening, in the retail side, how consumers are out there, spending money or giving us that signal that maybe they're not as fearful of the economy. But I'm getting some mixed signals here because XRT, the retail ETF, while it's up, I also see unemployment numbers still pretty high. I also saw this Pew Research poll talk about, majority of Americans within this poll are a bit more angry, or they're fearful, and they're less hopeful and less proud. Oh, when you do your own sort of sentiment analysis or reading of the market, where are you right now?
In terms of like XRT, so like right now, I think there's a healthy mix of doubt, and there's also some real earnings power that we're seeing from a lot of these companies, well, especially tech companies. Healthcare companies have been good. Retail companies have been not so good. Energy has been god awful. If you looked at the numbers that Chevron and Exxon put out this morning.
Well,
Um,
Exxon, yeah, let's talk about Exxon real quick. Exxon, I think, posted its
I
worst
think it was
loss, I think, in
Chevron.
its, was it? I swear I thought it was Exxon.
One of those two.
Exxon.
I thought it was Chevron.
Let's check that out real quick. Um, yeah, ExxonMobil posts second consecutive quarterly loss, and I think it was one of the worst losses in several decades or something. At least that's what I'm reading from this article. But anyway, point is, energy companies, you're right. I mean, clobbered across the board, right? Um,
Yeah.
the United States, I think, has about a 8 or 9% employment just in the energy sector. So, I mean, already because of the lack of movement in the economy, lack of transportation, energy is definitely getting killed. Transport. What is the transport ticker again?
IYT.
IYT. So I think we were talking about transport earlier. Transport was up a little bit for the day, but nonetheless, we're not really seeing the same kind of signs of strength from transport as we are, say something like tech, of course. So I wanted to obviously, follow up on that conversation. Like, where are you in terms of that sentiment?
Yeah, so if you guys have been like listening to me, I've been pretty big on value sectors and energy, the energy sector, the industrial sector, financials, and you could even say the transport sector. They're all in that whole value stock group. And so I came into this week really thinking that we were going to get some good numbers from the industrial sector that would show really robust growth over the next 1 to 2 years as we start to recover from all the effects that COVID has done. And to my surprise, we really did not see that good of numbers. And actually, in fact, I was waiting for Caterpillar to come out this morning and give some good guidance, and they didn't end up giving any. They actually pulled their guidance. They didn't give any for the year. So that really worried me, especially since China's on the path to get positive GDP, and they're doing a lot of industrial investment and all that sorts of stuff. And Caterpillar is directly tied to um, China's industrial development and everything. So for them to not give guidance was a really big disappointment for me, for someone who was hoping that the industrial sector could be the next sector to move up, just like housing did over the past month. Um, and not only that, but once we start to see that industrial growth ramp up, you should start to see oil itself ramp up, because a lot of the construction or the machinery is fueled by oil and everything, and just oil naturally goes up as global growth goes up. So you know, for us to not get that this week, I think it was really bad for oil. And then the numbers that came out this morning with Chevron and Exxon, I think, point to more layoffs and probably harder economic times. Um, so it's just a really bad situation in terms of the breadth of the market increasing. So I think you're going to keep seeing what you've been seeing before, where high growth and tech and all these other winners that have been winning for the past month, they're probably going to continue to win, because I think this quarter, I think a lot of people this quarter were expecting to see better numbers from the industrial sector, and they just didn't get them. And so now I kind of question that whole rotation into value. I don't know if it's going to happen at this point.
Yeah, I think that's a great point to dive into our next conversation or next topic, which is the lack of sort of rotation of money going from high growth or tech into value seems like an idea that's still not come to fruition. However, tech is still doing phenomenal. So it seems like investors are really just doubling down on the tech side. We saw Amazon, Facebook, Google, and I think Apple all report positive earnings. Um, and even this week, Jay Powell and the FOMC meeting, I think basically what came away from that meeting was the Fed stated that they're still going to do whatever it takes to, quote unquote, keep the market stable or keep the economy going. And they still have, pretty much all the ammunition in the world to do so. And we already know that, the Fed has gotten into Apple bonds and Microsoft and Amazon. So it seems like even the Fed is kind of posturing that, hey, right now, we're just going to make the winners even bigger winners. And we are not really giving a crap about what's happening on the other side of the market, where there's pain felt on the retail side, pain felt on small businesses. So the best bet right now, it seems like, is just tech, right?
I mean, yeah, I like it's been extended for a while, and it just continues to push higher and higher. And I think we also got earnings from Shopify this week and another high growth company. I cannot remember what it was. Oh, AMD. We got earnings from them too, and AMD had ran up quite a bit before its earnings, and for it to jump another 10%, and Shopify as well has run up so much, and for it to jump up another 10% on its earnings, it really is a testament to the fact that current valuations, at least at this stage, like, they do not matter. And I know that sounds very bubble talk and everything like that, but it is all about the growth rate. Can you grow at an exponential rate in such a tough environment when not only other businesses are not growing, but multiple sectors are not growing? And so money is just not moving into those sectors, whether it's the airlines, the industrials is kind of, chopped up sideways. A lot of the old retail stores are chopped up. They haven't done anything. Money is not being spread out, and it's being forced to go into specific areas, and people will pay whatever premium for those assets. I think that sort of valuation bubble will pop once the other sectors recover, but how long will it be until, companies like Dillard's or Macy's or anything actually recover, and it, at this point, it's just better to stick with tech versus try and go some other routes like I've been doing. Like, I'll tell you that personally, it has not been that fun, especially this week, to be in healthcare and industrials when tech has just done so awesome.
Yeah. I mean, I guess follow the Fed and buy all pullbacks in tech. that's,
Yeah,
that's
I
the
mean,
name of the game, I
honestly,
guess. Yeah. Again, that's not financial advice, everybody who's watching. So please don't do that.
I will
But
say I want to touch on a little bit. So you mentioned XRT earlier,
yeah,
and a lot of people, including myself, used to view XRT as the brick and mortar type ETF. So if you wanted to get a good read on the brick and mortar health of the entire uh, U.S. sector or whatever, you would use XRT to give you a technical chart. Well, that ETF has done some very surprising things this quarter, and I think it started even last quarter, as far as diversifying their assets. So the reason why this ETF is up, actually, if you take a look at Dillard DDS and Macy's, they used to be its biggest holdings, and look at those stocks. Those stocks haven't done anything.
no, yeah,
But I will tell you, their top holdings now, which is so surprising, are actually Overstock.com, which is a completely online business. Etsy.com is the second biggest holding. Camping World, Lithia Motors, which I guess is a an electric company. Amazon is its fifth biggest or its sixth biggest holding. eBay is the seventh. Carvana eight, and Stamps.com is the 10th. So it's really broadened out in terms of not just being a brick and mortar picture, but it's actually kind of an online retail, auto retail type ETF. So for people like me, who last year I would look at XRT to give me a read on the brick and mortar stores, it's not the same thing. And I really don't know an ETF that kind of exemplifies that sort of brick and mortar picture. But it's definitely not XRT. I just wanted to touch on that a little bit.
yeah. That's actually a really great point. It makes sense that say that the traditional buying and consuming of goods, where people will go out to the store or buy stuff, it has changed quite significantly. Whether it's the Amazons of the world or something unique like Carvana or Overstock, it makes sense that XRT itself would now position itself and say, yes, we are a retail ETF, but we ain't the old mom and pop shops like Sears or Macy's or Dillard's, right? Now we're into the next generation of consumer goods, or how people are actually buying goods, which would be Carvana or Overstock or the other companies that you listed. So that's
Yeah.
actually a great point, and something that our viewers should definitely pay attention to. Let me actually pivot to the S&P 500, because you know we have news that Tesla will now be included in the S&P 500. There was a question earlier in our equities channels over here, and one of the members actually asked about Tesla, being included in the S&P 500 and the impact. Now I'm going to go to that question real quick, but I do want to let our viewers know that we do have this equities trading side, and Facile, aside from putting out stock alerts, you can discuss things that are happening in the stock market, things that are happening in the U.S. economy. You can also look up Facile's top growth stocks or his daily equities updates, which are, definitely something that I read with my morning brew. So make sure y'all come join. There's a free Discord link below. So let's go on to that question, right, Facile? Tesla being included in the S&P 500. What are your thoughts?
I mean, it's good that they're getting such a premium company, but honestly, adding it at this stage, it's fine. Like I don't think it's gonna weigh too much, because in the end, I don't know if Tesla's even gonna go down from here, considering it's been such a strong winner, and the growth runway for the next 1 to 2 years looks very good. I really can't see this stock pulling back as much. My key level was for it to hold 1400. It kind of bounced almost immediately from that level, And when I saw the significant buying come in there, I was like, okay, they're probably going to hold it at 1400 at least, and it could consolidate. But I don't think it'll really shake up the S&P to the downside much. But it does give some growth trajectory to the S&P, and I think it in the long term, definitely over the next 1 to 3 years, it's pretty positive for the S&P overall.
Yeah, I would definitely agree with that. I think just talking about Tesla alone, I mean, I personally think that Tesla, because it still has so much short interest left, and because we're still in an environment where there's, in my opinion, still a good amount of FOMO or euphoria left, and with hedge fund managers still looking to capitalize on yield going into the final months into this quarter, stocks like Tesla, which are high performing stocks, are probably where money is going to be allocated to. It ain't going to be energy, right? At least at present moment, it's not going to be banks or financials. It's probably going to be high growth or tech stocks. So, yeah, in my opinion, I think Tesla is probably going to do just all right. My some of my big targets are still going back to 1650 for Tesla. If we break out of this key high, then my fib extension marker is right there around 1975. Right around that $2,000 psychological level. If we start breaking below, say 1350 or so, I would probably say that it might be a fast and swift move down to $1,000. But I don't really know what conditions in the market would set up such a steep drop in Tesla, because it wouldn't be Tesla alone. It'd probably be a broad market sell-off. So, I think my thoughts about Tesla is still fairly positive. And going to the S&P 500, the way I think about it is, there's going to be a lot of other ETFs, other hedge funds, which are a bit more passive buyers and not, directly investing in direct stocks like Tesla. They might go into, the SPY ETF purchase and find it more appealing now that Tesla's included.
Yeah, I definitely agree to that.
Well, I think the last thing I want to talk about, Fasla, is I think the overall. I mean, you are in the U.S. I'm for the viewers who are watching, I'm in Colombia. I've been here for a good 6-7 months now. Wanted to take a break from the U.S. and I think I got out just in time. But I want to get your I want to get your understanding of how the economic sentiment is in the U.S., but maybe even Houston, because Houston is one of those somewhat of a maybe a red or a purple city in a red state, and then more so
it's
Republican.
It's a blue city. I'm telling, for whatever like anyone thinks, it is a blue city. Like there's a lot of red here, but I'm telling you, I like it is a blue city, without a doubt. Houston
Oh,
itself, maybe
interesting.
Texas is purple, but Houston is blue.
Gotcha. Oh, I didn't know that. I thought Texas. I'm sorry. I thought Houston. Predominantly voted leaning to the red side. I mean, obviously over the past couple of years that has shifted more purple, but I thought it was more red than anything.
You may be right. I just am looking at the past election that we had, whether it was the more local elections or the judicial elections, and it was, I mean, it was like a blue wave completely. You had candidates that were really not as experienced as the Republican candidates win handedly,
Yeah.
because there was just sheer volume to vote in, just all the Democrats, just down the list Democrat. And I think just talking to people in general, most people like whatever you have, whatever preconceived notions you have about Houston, we are definitely like a blue city. We are not red. There's definitely shades of red, and they're pretty strong shades of red, but the majority of people here are blue or in the middle.
Good to know. Okay, so yeah, I actually didn't know that. Well, I mean, it's good for someone like you to sort of share that with us because you're kind of on the ground at giving us the real insight. So my next question to you is, first of all, how is the sentiment or environment jobs wise in Houston or in Texas? Because what we typically see, those of us who are outside of Houston or Texas, or maybe even in other parts of the world, we can see some of the damage done on the economy coronavirus still being pretty active and spreading for the most part. Um, the way I see it, the damage from coronavirus is still there. It's going to keep happening. But overall, I mean, the damage is done, right? Vaccine itself, we might get it in the next 6 months, maybe a year, but the vaccine overall doesn't really cure the ultimate damage done on the economy thus far because of the overall jobs loss, potential businesses shut down, people's net worth or life savings. Again, these are middle class, low income people. A lot of them are still struggling, and you don't just get restaurants and businesses employment back to normal levels like with a snap of a finger. It's sometimes a multi-year or a multi-decade process. I also read a survey actually that food, medical, and lumber prices are now actually up. So though we may not say that inflation has started fully through all sectors, but it is slowly being visible. Like I think some of the food prices that were included were things like meat and milk, some of the more basic products, medical supplies, and then of course things like lumber.
Mm-hmm.
So my question is, first of all, are you seeing this kind of anger building as per this Pew Research poll that I have on my screen, or do you still see maybe complacency or everything is normal kind of thing in Houston or Texas?
I'm gonna be totally honest. Like, from the time the hospitals were overflowed to now, that nothing has changed. Like, the sentiment has remained exactly the same from everyone I talked to. I think people have just decided, even when the second case or the second wave was spiking up, people were already had already decided we are going to live in this environment. Like, we just won't give you hugs. We're not going to give you handshakes, but we are going to continue our lives. Like, I would go out and still see a restaurant packed, and then look on my phone and see that nearly all hospitals in Houston were like overflowing or something like that. And I was just like, oh my gosh, this is pretty crazy. The disconnect is just so apparent. But and even in my own life, like, I really didn't change that much. I said I was one of those people. I'm not the type to just wait for the vaccine. I'm going to continue my life. I'm just going to operate in this new environment. And I think that has been the mentality, at least here in Houston, for the majority of people. I don't know many people that have kind of locked down and said, I'm really not going to go out as much or anything. Like, even the malls, okay, even the malls are getting packed again. And it feels like COVID kind of is a thing of the past. Like, no one is really actively thinking about it until you meet another person or you hear someone cough in the grocery store. Then you're like, oh shoot, okay, that's cause for concern. But
Yeah.
it's, I don't know if I would say that people feel angry or anything like that. I think it's just very passive. I think people understand what's going on, but they're not, you know, backing down from it. They're willing to live with the risks in a more constructive way than before.
Okay. Okay. Well, good to know. I mean, I think definitely for someone like myself and those who are watching who are outside of Houston or Texas, they get to get a view of what's happening in that particular area.
Yeah,
Um,
I will say though, like, the amount of businesses that have closed down is really scary to me. Like, especially retail businesses, uh, some really good restaurants have closed down. Very old restaurants have closed down. Even like, for people in Houston, like Barry's Pizza closed down. There was another, um, I forgot. There was like another bar that had been here for 40 years. It was like a country bar that ended up closing down just today or yesterday. And so you're still seeing a lot of this drip effect on the economy. But I really don't think we've seen the major layoffs from the energy companies yet. Like, I haven't felt it yet from my friends that work in the energy industry. They're still employed, but they're not working as much or anything like that. I haven't felt the fear from them as of yet. So that may be coming. Houston is very reliant on energy. We have a huge medical community over here, but energy definitely provides a lot of the jobs and economic support for the city. So So far, things are fine, but I definitely believe they could get worse if things continue in this direction.
Okay, fair enough. Um, Faisal, any other topics that you want to talk about?
Let me see. It
Oh, I
was.
did. I was going to actually mention a position that I just entered. Beyond Meat, this is one of those stocks where,
Oh yeah,
I just,
I'm
I
still in
think,
it.
oh, you are? Oh, wow.
Yeah, I'm
You
still in it.
bigger man.
I'm waiting for it to close 2 days below 125, and it's just not been doing that. It has earnings coming up, and I'm just, I'm a believer in the product. I just had a Beyond Meat burger yesterday, so I'm thinking about holding on to it for the earnings. I think they're going to be great.
Good stuff. When are the earnings, by the way? Because what I was going to mention is, I pulled the trigger on some option calls for what was it, August 7th, 14th, and the 21st. So all I'm really hoping for is a pop to 131, which is like the middle Bollinger Band right here. But I was curious, what your thought process is in beyond. And by the way, when are the earnings?
The earnings are on the 4th after the market closes, so I think it's like Tuesday, after the market closes.
Okay, perfect. Good to know.
I did want to talk a little bit, and I want to get your opinion because I know we're a little bit on different sides about the materials trade, more specifically silver. And I don't know if you have a gold position as of now.
I have a GLD position and a small GDX position. So yeah.
Okay. Yeah, gold did very good today. I forgot there was some very significant news that came out this morning in regards to gold, and I think it just ended up taking the entire material sector up. And so I would just wanted to get your take on if you had heard anything about that. Let me see if I can find it. Um,
No, I haven't. I think most of my thesis for gold and these precious metals has really come from the surrounding economic and currency factors that have, in my opinion, sort of plagued the currency or the economy in such a way that I am forced to now buy things like gold to hedge risk, whether it's in currencies or equities, with silver and gold. I just have no other choice. Well, obviously Bitcoin too, of course, but these are some of the main reasons why I'm focusing on that. I would actually argue that a lot of people who trade gold have the same mentality why they get into positions like gold, because they're experiencing something that they cannot de-risk equities portfolios, or they cannot hedge risk on US dollar cash positions with anything other than precious metals like gold or maybe even Bitcoin.
yeah, I would agree. And I think, just touching on just materials in general, I think when I would speak about the rotational effect of money moving out of tech and into the value sectors, I really missed the ball on just how much the rotation could go into materials, specifically gold. And silver has done really well recently, and I'm in a short in that right now. It's kind of jumped up a little bit too much. It was looking good yesterday, but that's just how this market is. And I would say that if we start to see industrials teeter off and tech continue to outperform, I think gold will be one of those sectors that will see money move into it. Maybe materials in general. I like Vale for iron. I like what else was there? There was another one for another company. I
What's
forgot.
a ticker, Vale?
Yeah, VALE. I
Oh,
think they
Vale.
reported. I gotta read that report. Let me see. I think they reported a couple days ago. But yeah, they were my top dog throughout the years when I ever wanted to play iron, which was very rare. But I always kept an eye on this stock. Um, and so I think materials once again is just a sector that has not been loved. And I think for the reasons that you said regarding the dollar and currencies, this sector seems like it does have a lot more room to go. And I think the volatility, to my surprise, could actually accelerate if we start to see the sectors like industrials, financials, and energy fall. So that's a sector that now I'm looking to get back into. I'm short silver right now, but maybe over the weekend when I do some more research, I may end up covering it. It's already close to my back to my short price, so who knows? but yeah, that's just something that I wanted to touch on a little bit as far as even though I felt like it was overextended and it's overcrowded trade, there's still more money on the sidelines. And if money's not going to go into these other sectors, I think gold is, like you said, a very common sense play. And there's a lot of people who believe exactly what you're saying.
Yeah. Um, I think one of the other uh, decision making factors on buying into gold is, like I said, right, currency risk. So if we start looking at the Dixie, and by the way, before I jump into that, I mean, if you're looking at your silver position right now, I would probably say with the candle that looks like this, and on top of that, with the Dixie that's bottoming out right near this key support area, as you can see, the dollar has a pretty sharp, bullish engulfing candle so far. If this is the case, and say dollar is ready to bounce from here, even temporarily, and silver is overextended, and gold is overextended, and Bitcoin is overextended, well, I would expect all of those to start pulling back because the dollar is now about to start, pushing up a little bit. So this is one of my key factors that I pay attention to. And so one of the reasons why I started selling, or I closed out my silver position, I think last week or something, somewhere around this area. Well, that was because it was a big support that went back all the way to 2018 October. Obviously, I was a little bit too early on my silver position because it ran up another 7 or 10%. But I made 22% out of silver. I made, I think, 25 or so out of gold, and then GDX, I think I made like 40%. Um, so when I look at the dollar and I say, okay, well, the dollar is about to bounce and you're in a silver short, well, I'd probably say you're pretty well positioned for your short right now, especially, like I said, with a candle that looks like this right here on the weekly, this, ugly looking doji right here.
Yeah, I think I would agree with you on that. It's just this whole rotational thing, and coming into the week expecting something and just not getting it at all in terms of not only just performance, but the earnings didn't match up with what I was thinking. I'm just trying to figure out where exactly is the next move going to come into because uh, materials. I agree with you on the dollar correlation. And maybe, I'm not that experienced on commodities or materials, so that may be an overweighted factor. If the dollar ends up rising, it's really, really tough for materials to keep rising. Um,
Yeah.
but I just think, money's got to go somewhere. And I think tech is a common sense play because it's growing so well, just like I think gold is. And so I think there are other factors that could push the volatility even more to the upside than we think. So, um, I'll just be thinking about that, and hopefully silver goes my way. But if not, I got a pretty short leash as far as how much risk I'm willing to take.
Yeah. Um, I don't think we have any other questions, so I think we're going to wrap it up here, folks. Again, the Discord link is below if y'all want to come join the free side of the community. If you want to join the Advantage side, we have altcoin trading for crypto, Bitcoin trading, vassals equity analysis, and then his stock alerts every single day. And then, of course, we have an options side as well. So hope y'all enjoy this commentary, this video. None of it is financial advice, so make sure y'all talk to your financial advisor if you're about to pull the trigger on something. Until then, we'll catch up with y'all Sunday. All right.
Peace.